Well, very volatile session for the Aussie share market, and it does look like there is a divergence of opinions, and it has to do with the US and interest rates in the US. So it does look like the US economy is still relatively weak. On Friday we did see GDP numbers and we did see a negative read there. So expectations that the US economy is weaker than expected, that they've had a pretty poor winter, is starting to play into expectations around interest rates. Of course, this week's going to be a massive one for the US market with the non-farm payroll numbers out, but I guess with the divergence we are seeing greater volatility as well. If we have a look at the range today, we were down as little as just 0.1% at one point during the session, but down as much as 1.6% during the session as well. At one point, every single sector was in the red. By the end of the session, we did see the utility sector in the black and the energy sector also doing quite well. In focus were the manufacturing numbers from China. We have already seen the preliminary read for HSBC flash manufacturing, but we saw another read and a slight improvement there. We also saw the official numbers and they showed an improvement from the previous month. And of course, watching the Chinese market, I mean, what a volatile market. On Thursday last week, the Chinese market was down 6.5%. On Friday, down as much as 4% before finishing pretty flat. And then today we've seen the market surging 4.1% at the moment. So the Chinese market continuing to do well. And the Australian share market, we had a pretty bad session, but off the lows that we saw in the morning.
Just on,
I guess my view is a little bit different in that we will continue to see volatility in the oil space. I am watching geopolitical tensions and activity, especially in the Middle East, where Iraq is the second largest producer in the Middle East, and we are seeing ISIS now blowing up refineries. So a bit of news and volatility in terms of that oil space, but we really haven't seen the US cutting down on oil rigs too much or producing significantly less. So there's still a lot of supply out there in terms of oil. In terms of the sector, the Woodside Petroleum is where I'd be, and that's because of a different reason. Oil prices do look like they've stabilised, but it's also very high yielding. The share price of Woodside Petroleum hasn't moved virtually from when it paid its last dividend. So you've seen a pretty flat share price, so no capital growth, no capital losses, and yet the yield in just that one dividend was 5%. So you are seeing some of these mining stocks having significant dividend yields, so significant incomes in a world where income is pretty hard to come by. So Woodside Petroleum still with that 70% dividend payout ratio, oil prices stabilised, that yield's still looking very attractive. So any of those investors out there who would have bought Woodside Petroleum a few months ago, received that dividend of 5%, capital growth hasn't happened, but you're receiving a nice stream of income there.
Scott, would the moment and something not too late for people to try and get exposure to?
I think it's definitely in bubble territory. The problem with bubbles is that they can go on for a lot longer than anyone expects. So timing, when it's going to burst, is probably a problem. And I guess if we have a look at just markets around the world and what's driving it, a lot of the time it isn't fundamentals, it's the macro factors, and in particular, it's the surge of money that's being printed by central banks finding its way into the markets. In terms of China, I think we are seeing a surge of money going into the markets for another reason, that the government is clamping down on the shadow banking area, and that money has to find a home. The market's been going up very strongly. There's a fear of missing out, and a lot of that money has been finding its way onto the market. So we are seeing a liquidity-driven surge there for the markets over in China, but we've seen a liquidity-driven surge in other places as well, such as the US markets, the Japanese markets, as well as the European markets. So I think it's important to watch that printing of money, the flow of money, the supply of money, and where that's finding a home. And in terms of China, I think some of that money from the shadow banking and the clampdowns there is finding a home in terms of the stock markets over there.
But you think it's a bubble at the moment?
I think so. If we have a look at the Shanghai Composite, you just have to have a look at the returns. It's certainly not a sustainable level of growth there. So we are seeing a lot of liquidity finding its way into the markets. But just in terms of fundamentals, you just have to hear of some of those stories like Han Energy, where there wasn't much in terms of an actual business, not much in terms of an actual terms of sales and in terms of an actual business, and yet you are seeing quite a lot of money still trying to find its way into these very high growth type investments.
Mike, a bubble.